Hello traders, in this video we are going to be covering high time frame levels, how you can plot them on your chart and how you can use them in your everyday trading and technical analysis. So this is something that I believe to be absolutely fundamental and is something that every single trader should have within their trading vocabulary. It is the first thing that I do whenever I open up any chart, and this is valid on absolutely any asset, whether you like to trade Bitcoin, whether you like to trade altcoins, whether you trade Forex, gold, oil, stocks, any single asset. This is like one of the most important things you can do on a chart, and is the first thing that you should be plotting whenever you open up the chart. Okay. So first of all, what are these levels? Okay, so they provide strong levels visible to all traders, which can provide liquidity to the market. Whilst they do not give any indication of volume, they give a clear visual representation of where support and resistance is likely to be. If trend has changed here before, then it has a decent chance of doing so again. Instead of indicators which constantly chase price action, these give clear levels where price action will react. Okay, so this is a really important point here. Okay, so far too many traders get too caught up with adding like really complicated stuff to their charts that is constantly moving because of the price action. Okay, so moving averages, oscillators, they all move because of what price has already done. Now, what these levels will enable you to do is to get one step ahead of that price action and to know where the price is going to react when price gets there. Okay, so they're really powerful because these levels will be the same no matter whether you're the world's most experienced trader or you're just starting out and you've been trading for 2 days. Okay, your levels will all be the same if you know how to plot them correctly, and that is what makes them so powerful. If you think of a market as constantly trying to find balance, and if you think of where you get these changes in price and these pivots in the market, these rotations, the change in trend, they're going to be at levels where a lot of good traders know the price is going to reverse there before it even gets there. And that's a really, really important thing here, is that knowing the price is going to react when price hits one of these levels, and also being confident the price is going to hit one of these levels, is what can really give you an edge over the rest of the market. Okay, so we're just going to go over very simply how you can plot these on your chart, and then we're going to have a few examples of how they work and how you can trade off of them. All right, so first of all, plotting your levels. You want to be using top-down analysis to identify your levels. So this basically means that, so say for example, we have a Bitcoin chart here, okay? And we're going to plot our levels based off of this Bitcoin chart. Bitcoin's not the oldest asset in the world, okay? So you don't really need to be looking at like 10-year levels, at yearly levels, at quarterly levels. They are important, but they're not so fundamental to these levels that you want to be plotting on your chart. Okay, if you were looking at something like Forex or the S&P 500 or gold, it has a lot more history, so you're really going to be wanting to plot your yearly levels and your quarterly levels as well. But for Bitcoin, we'll just stick to the monthly, and we'll go over kind of, yeah, how you can plot these onto your chart. So by top-down analysis, I mean you start with the highest time frame possible. So on this occasion, we want to be looking at the monthly chart. So what we are looking for is to look for candles which show a change of trend or a pivot within the market, and to then mark your level from the open/close of the candle, not the wick. Okay, now this is very important, because if you're taking your levels from wicks, you have no indication of time off of that. Okay, a wick would be the same, so this 65k high here would be the same if you're on a 1 minute chart. It would be the same if you're on a 1 day chart. It would be the same if you're on a 1 month chart. That's the high. Okay, the thing that makes it important and what makes these levels so powerful is they add a time aspect to this. Okay, so when you're on your monthly chart, you want to be looking at these candle open and closes. So you can see here, you have your pivots in the market. So we'll plot this onto our chart. So we'll add this as a monthly level. Okay, you can bring this down. You can see that we have our lows down here. So you can add this as your pivot there. Whoops. you can then bring this back up again, mark this as your pivot high, bring this back down, a swing low, bring this back up, and you can see here again the change of trend at the top here changes the trend to the downside, and then you plot your monthly levels. And that's really simply just what you want to be doing, looking at your highs, your lows, where trend has changed, just to start off. Okay, so that's a really good way to start everything off. Then you go down a time frame, okay, and you start to look at your weekly. So again, we're zoomed in a little bit more here, so we'll just focus on this section of the chart for now, and we'll work our way from, let's just work our way over from here. So you can see that we have a clear high over here. We'll mark that as a weekly level. So you see the W. We will see here how price came down. You have this change of trend. Price comes up. You then have a weekly level that forms up here. You have a change again of trend here. And then again, all the way up to the top here. And you can see how this starts to build up levels. Okay, and then you can again add this in here, and we start to work over. It's starting to get a little bit busy now. Okay, and we're going to cover how you can clear some of this stuff up on your chart in a minute. But let's just as an example, show you how you're looking for your highs, your lows, your highs, your lows, your highs, your lows, your highs, your low, then your high, and then see if we can obviously get lower again, or what happens next on this chart. Then you go on to your daily level. Okay, so we'll do this again. This time we'll just focus on this section of the chart, and we'll start to work our way backwards. So we're looking at here, very recently, we have this daily level. So you can mark this as a daily. You have a low. You can come back. You have a high. You can come back over here, you have a low, and then you can start to look at the top here. You have a high, you have a low, and kind of so on and so forth with all of that. And also, yeah, you can zoom out a bit more, and you can see there's clearly some daily levels like sticking out here that you can be aware of as well. And this starts to build a picture, okay? Now, the problem with this picture at this stage is that that's a lot of levels, right? Okay, so how do you know which ones really are the ones that are important to take, and how can we clean this up a little bit? So if we zoom back out onto our monthly chart, and we can look at what we've done here. We've plotted these levels, but there's a lot of levels here, okay? So once you've plotted them, you can start to follow some additional rules, okay? So what you want to be doing first of all is to favor the higher time frame. If a daily and a monthly close are close together, then use the monthly, okay? So this is one way that you can start to clean up your chart. But also, you would also like to favor the newer levels. So if you have two daily closes that are close in price, but several weeks apart, then you can favor the newer one. Okay, so we'll go back in and we can have a look at this, and we can start to clean up basically based on what we were just looking at then. So we're looking first of all for any daily levels that are really close together. So here you've got two dailies very close together, but a clear time difference between the two. So for me, at this stage, I'd probably be removing this from my chart. Okay, you want to be looking at the ones that have not yet been tested. So as price starts to come in, you're gradually moving all your levels across to follow the price action, and you're looking at the things that haven't been tested previously. Okay, so that's a daily level that gets quite nicely cleaned up there. You can see there we've had this tested this high, but again, still valid. There's nothing too close to it, and this starts to give us a little bit of space here. We have other issues up the highs here. Okay, so we have this stuff going on here where we've got all of these levels. In fact, you could even draw a daily onto this as well, yeah? So you can draw a daily onto this, and you can see here these changes in trend. There's all these levels close together. At this point, this is when you start to look at not only the time aspect of things, but also the significance of the level. So if you're looking at a daily level, it's not going to be as strong, in my opinion, as a monthly level. The higher the time frame that this level has been set off of, basically the higher the time frame of the trade that you can take off of it. So in order to do this, very simply for me, I'd maybe be aware that there's a daily level here, still be aware of it, but you can start to clean this up on your chart. Again, you can see we've got a few weekly levels that are all together. You can see this is more recent, but just by looking at the chart again here, let's go back over. You can start to just clean up some of these levels and yeah, start to then be able to just get some more like clear kind of idea of what's going on just by cleaning up some of those levels there. So that's kind of one way in order to just, yeah, clean things up a little bit and make sure things don't get too busy on the chart. So next, let's move this over a little bit. Always be aware of old levels. You never know if price may come back to them. So although as you're moving through the chart and as things get closed through, you're moving your levels over with the chart, okay, you don't want to be removing anything that's never been tested. So all of this stuff that's up at the top here, prices never come back and revisited it. Prices never come back and revisited this. And certainly prices never come back and revisited some of this down here either, okay? So you've got to be aware of those. If price does come back down into those levels, you've got to know where they are, and you've got to be able to react when price does get there. So also, levels are strongest on the first test, so favor the ones that have not been touched. So again, you could see as I was going through, as a level gets hit, you wouldn't remove it from your chart unless you see, so for example, we've come down today, we've hit a daily level, okay? There's no need to remove this from your chart unless you start to see this closing through, okay? And then coming back up and starting to close through again. You still got to be aware of this, but it's strongest on the first time, okay? And we'll start to have a look at some examples, some very recent examples of how you can kind of know how things are strongest the first time they're hit, okay? So again, back onto these rules. The final thing that you want to be doing as well, and this is just as part of your general routine when you wake up, is to mark your daily, weekly, monthly open. They can act like a magnet and can help to identify the trend. Okay, so once you have all of these levels set, just be aware that you can also add these onto your charts. Okay, so you can see here this daily level. It marks the change of a trend here, basically, but it is our daily open. This will also clearly be our weekly open because I'm doing this on a Monday. And then you can mark off your monthly open in very much the same way. So we'll bring this down here. We'll do this on here. And you can mark your monthly open onto this chart. So this is your daily, your weekly. We can probably make this the weekly open. We don't really have a daily open. You can start to do that as price goes on. And then again, starts to build up these levels as you go onto your chart. Now let's just have a look at this, okay? So today, just in one day, okay, you can see how price has reacted already to two levels. So first of all, last night, where did price go? Came straight up into a daily level that had not yet been tested, okay? So this level here, you can see this level was formed on the daily open of the 30th of June. Price moved away from that, never came back into this level, never tested it. Came all the way back up, all the way back up. Everyone got very bullish. What did it do? Came straight up into this level. Strong rejection. Okay, so at this point, we're looking at a move down of almost 8% from one single level on the chart, okay? Now, there could have been other confluence here, but the great thing about these levels is that generally speaking, they're pretty powerful enough. Like, you could get a scalp off of this, depending on what confluence you can add to them. That increases the strength of that even more. And what did price do? It again came right back down into another daily level. Okay, so you went from this daily level here with the rejection to this daily level down here. Okay, now this one not as strong, okay, because you can see how price did revisit this on the following day, but it still shows that there was a pivot here in the market, and it's still something to be aware of. So you can see these wicks down into it. Means it has been tested once. This day has been tested, and this daily close has been tested, but we're coming back into this area again. And because you would have likely seen a lot of volume there based off of the way that this had reacted in the past, with price coming into it, moving around it, getting some support off of it, then getting your move up, you can see again how price is reacting there at the moment. And you can see going on into a even smaller time frame, how you have this daily level, you get a bounce, you lose it, and now currently acting as resistance. So has price lost this level, or can it reclaim and start to change market structure and start to move back up? Okay, so again, that's just a very recent example of how important these levels can be. And we can go back a little bit as well. So we can start to look at maybe some levels that were formed a little bit earlier on. Okay, so let's just take, for example, let's go in and let's take the start of this range as an example here, okay? So what you have, forget about all this price action. Let's focus on this. You could have marked a daily at this high. You could have marked this again. You have your weekly level down here that got traded, and you can see if we move in onto the lower time frames, how you go all the way back. This might take a while. But you can see here how this daily level acted as resistance when price came back up into it. Okay, so you can see here the daily level was formed. It moved away, never got back tested, moved away from it, came back into it, got that rejection, attempted to get back into it again, and then got that rejection. Okay, so again, you can see the importance of this here with the trading. Okay, and the other interesting thing, so just to make this even more kind of interesting than before. So after this happened, formed another daily level here. So as you see, price came up, it got that rejection off of this one. Price came down, formed this level down here, came back up, rejected off of here. Then you see a change of trend. This at this point had not been tested. So I know we're messing the chart up a bit, but I hope everyone's kind of following what I'm doing here. We're just looking at some previous examples. And you can see, go onto your dailies, price moving away from it. We go onto the lower time frame. We zoom out a little bit. And what happens the next occasion that price comes up into an untested daily level? Price moves away, gets a big move down, creates a new level to the downside, into your daily, and rejects. And then at this point, this weekly becoming support again, okay? So you can just see constant, if you have these levels marked on your chart, how they will constantly act very strongly as support and resistance levels as price moves up into them. And yeah, you start to build up this picture of all the times that they act as support and resistance, not only on the ways up, but also on the way down. Okay, so yeah, I think hopefully that makes sense to everyone here. I would say go away, start to plot these on your charts. Do this every day, every chart that you open up. Just start to get an idea of how you can plot these onto your charts, and then look at the relationship that they do have, that price has had with this. So you can start to go back like I did today, or just go from kind of opening up a fresh chart, mark these levels on there, and again start to be aware of these levels as price is moving throughout the days and the weeks. So I can just very quickly, let's do this on one more chart. So let's just, for example, let's go to something else. Let's go to a gold chart, and I'll just give you one more example very quickly here of how you can do this on gold. Okay, so I've got one level here. I don't know what that is. On gold, let's start with the yearly. Okay. And I've not done this before on gold, so I'm not aware of how things are. But again, you can see highs on the market. You can call this your yearly level. You got some lows down here. Oops. You got some lows. You can go onto a monthly chart. Again, you can see here how this yearly had been acting as support. Okay, so you go down, you see this bounce off of the yearly. You see this close through the yearly, but this wick through the yearly, but most importantly, no close here. You can move on to a monthly time frame, and you can start to plot your monthly levels. So let's plot a monthly there. Let's plot a monthly there. Again, let's move a monthly level down to here, and you can start to have a look at these highs. But let's just stick with this little range that we're in right now and see if there's anything interesting. So we've seen how the yearly's acted. We go down again, another time frame, onto this weekly level. Not really much that's changed here, but again, you can see the importance of this level. Where does price keep getting rejected? It is at this monthly level that was formed as price came straight into it. So as price comes down, you test it again. You can be taking short positions off of this with a relatively decent invalidation. Okay, so again, quite straightforward, but not really anything new on this. I guess you've got a weekly level that's down here. It's not been tested again, so we're not going to see anything interesting from that. But how you can start to build up this picture, you go onto your daily, and yeah, because we're having this consistent rejection off of this monthly level, there's not really anything different that you need to be plotting on here. What you can see here is you see a move up, a move down with a quick move up that hasn't been tested. So you could plot this as a daily level. Okay, so this could be plotted here as a daily, because you see the move away from it, and price at no point until recently has come back into it. And again, where is it finding this support? It's finding it within this area, and there is an important level there. So there are other things going on here. You can call this a daily order block, you can call it what you like, but it's you can see here just the very significance of this being a level that will be the same for any trader, no matter what they're looking at. If you can't plot this any differently, this daily candle close open is going to be the same no matter who's looking at this chart, no matter what kind of chart you're looking at. It's the same for everyone. And yeah, it really helps to give you an idea of where price is going to move. So yeah, I hope that makes it clear for everyone. Please do give this video a like. Please do subscribe if you want to see any more content like this in the future. And yeah, please do go away and start using this. I've said go away twice. I don't mean like actually go away. Like, please do stay and watch my videos. But please do like go and try practicing plotting these levels on your chart. See how price reacts. See how strong that these levels can be, and then start trading them. Just give it a go. And yeah, thank you very much for watching, and I'll catch you on the next video. Cheers, bye.